Okay, so it's been a little bit since I have released the bootcamp, and I felt like there is a little bit more to say when it comes to day trading, crypto and, especially Bitcoin or ETH or whatever you will choose. You will be met with some different indicators and things that might let you wondering how to use them or not. So this video we will kind of stick for a inside the exo charts, where I will kind of talk a little bit about different things that I felt like I haven't mentioned in the past. So when it comes to the data and order flow you want to be using for day trading crypto, like I said, I am sticking with Bybit. Bybit is not the exchange that has the highest amount of open interest or volume, but since it's heavily kind of pushed from all the different influencers, and they have basically quite a decent referral systems that lets all the people make decent amount of money if other people use the referral links. It's a really a platform for a retail traders, especially since they don't have any KYC requirements for deposits and withdrawals. So it's really I feel like it's a little bit of a go-to place. The other options are Binance. That this for the newer people, Binance always kind of seems like a no-brainer issue when it comes to order flow because it's a biggest crypto exchange. But I feel like there is a quite a bit of wash trading on Binance, which means that obviously they are kind of trading at their own platform, so they will increase the volumes, and which will put them at the first place. So if you will start looking at Binance data, which is inside a Sierra chart, you will often find that lot of kind of moves are really over the top from the both sides. You will have a massive amount of buying to the upside, then you have massive amount of selling to the downside. It will be always kind of this crazy amounts of volumes. So this is why I feel the Binance is not the best choice. BitMEX is the second one on the Sierra chart. Obviously, BitMEX used to be a go-to place for everyone. When I started day trading BTC, back in 2020, basically, I used to use BitMEX data only. It was kind of a really good place as everyone was trading on BitMEX back at the time, but then they had different issues, and a lot of people just left BitMEX over the time. So now I feel like BitMEX can be a solid way when you are using a Sierra chart, but I don't know, every time I look at BitMEX data I really need to go to low tick time frames, and also some of the buying and selling is kind of a all over the place a lot of times. So I'm not biggest fan of BitMEX. Basically the last option is FTX, and I never really used FTX. I don't like the platform for day trading. I use FTX for swing trading, but when it comes to day trading, I feel like their platform is really terrible, and overall I just don't like it. They very often have these kind of a crazy wicks to the both sides, on which other platforms don't have, and so on and so forth. What is also worth to mention is the Binance is when it comes to these kind of a low liquidity events, when market is really dropping fast or rising fast, Binance usually has the least amount of kind of like crazy wicks that will run any amount of stops. Obviously this is at the end of the day, the volume is still highest there. So yeah, but overall, Bybit is my go-to choice for day trading crypto. Mostly because the CVD, which I feel like there is a kind of a huge edge in CVD over at Bybit. You know, it's you will so often see one side going on the extreme buy side or sell side, and once it's confirmed in any shape or form, you will very often find a decent trades. Okay, so we are set on that. You can see now, here's the extra chart. After I released the bootcamp, they have ran this huge update, which is really awesome, and I feel like this is putting them on kind of a go-to platform when it comes to crypto. I'm not, you know, affiliated with them in any shape or form, although I know the founder quite well, and he's you know, the extremely cool guy, and he is really putting a lot of work into all of this. But yeah, I will be, you know, if I decide to day trade BTC or ETH, which I kind of do still during like the US open hours and the European open hours, you know, picking these small windows throughout the day basically for day trading. Anyway, this is the extra chart, and what I mean by that you can now, if you are using a desktop, you can basically add, you know, different third-party platforms. You can see now that I have a trading view inside the Excel chart, which is actually pretty cool and useful. So what you want to do, first of all, let me run you quickly through the platform. If you click here on the workspace, you can kind of create new workspace. Then you will be just kind of adding the charts from the templates that I provided you. I have this on my end, is a little bit messy, but you know, you will add your intraday chart, and I will just do it for BTC. The split window with ETH is actually something that I'm currently trying to kind of watch both, since they are, you know, heavily correlated, and then just kind of picking the cleaner trades. But if you are kind of new to here, just stick with BTC. Anyway, you know, so basically how you want to start, and sometimes you can see it's a little bit buggy here. I don't know what what happened. Yeah, it happens sometimes that the platform is kind of a little bit messy. It might be only on a Mac version basically, but I think I need to close it and open it again. So let's do that. Let me just close all the things, or just let's keep it like this. And once this is going to load again, you know, here is your kind of a workspace you created. Everything gets saved here. So first things first, you know, you want to add the charts that I kind of gave you. The name of the templates will be different, you know, like I said, mine is really a messy one, and then you can basically just move these windows how you like them, you know, so you can kind of split these two things, and you know, you will have a this intraday chart, you know, next to the footprint. Then you can add something like a TPO chart that I don't even know how the one that I use is called. It's not this one, but I have some other templates here as well. This is something, a TPO chart, and I override it with the footprint, of course. So sorry for that, but you kind of see the process, you know. You are just kind of importing things that you want. So now I have a TPO footprint. I can, you know, for example, put them like this, and generally what I like to do is just, you know, leave it as clean as possible. This crashed, like I said, you know, sometimes these things happen. Obviously I've been using it the whole day, and it crashed twice during the video, but didn't crash before that, so as always. But you have your windows here basically. So then what you want to do is for example, for this same window, because obviously if you are day trading, you will be mostly stuck to this chart. You know, your TPO levels during the day, they are already marked. You know, if you have any sort of composite profiles, if there are any single prints or poor highs or poor lows, you are going to kind of mark them before your trading session, so you don't actually need to look at it throughout the day much. With footprint, you only look at footprint basically when you actually want to be trading, so the footprint doesn't have to be there all the time as well. But if I going to add a trading view chart here, which will load in a second, you can see that this is actually pretty useful, because now I can have a 30-minute chart for Bitcoin next to my kind of a intraday execution chart. You can also make it on a full screen, so all the tabs will be gone. And you know, this is pretty cool, because like I mentioned in a intraday video section, you know, you want to be using this as your kind of a trading chart, and this is your execution chart. You know, I'm not picking trades blindly based on a tick charts. I am always looking at the kind of a 30-minute chart of the flow of the 30-minute chart basically, and only then I am making a trading decisions. Something that also changed, this is something that I figured out yesterday basically, is that if I add this indicator to the intraday chart, I have these footprint bar statistics, which obviously if you zoom in, you are going to see the volume and delta for basically each bar. But when you head over to the settings and you change this color grade steps to 3, you can also do a 2, but I think 3 is better, and the delta as well. You are basically not looking at the numbers, but at the areas where these get really, you know, highlighted basically with a high volume and high delta. This is your alternative for the candle coloring basically. You know, the candle coloring in Sarah chart, or the candle coloring in a trading view, which you can see also here with this indicator that I showed you, is highlighting the candle based on the high volumes. You know, exocharts cannot do that, but if you look at these footprint bar statistics, because you know, kind of a default shading for these things is set, I don't know, for like 8, and you get all these different shades, which is not that great. But if you really put it to 3 or even 2, and then you kind of have this, you change the percentage here. So for example, if I put 200 here, okay, I cannot put actually more than 100 is maximum, but basically you can see that, you know, the bars with a high volume get highlighted. I think the 3 is better, because this way you will really get the kind of a highest volume ones, and you know, you get the point basically. So this is kind of a substitution for a candle coloring in a exochart. I think this is actually pretty cool thing to have here. Coming in, you know, CVD with a highlighted single bar divergences. This is kind of a self-explanatory. I covered that in the videos, but there are some other things that are pretty unique to exocharts. So the net longs and net shorts are indicator that is coming from a open interest. You know, if you don't know what open interest is basically showing you that, you know, if price goes up and open interest is go up, you know, that means that new longs are opening. If price goes down and open interest is going down, and open interest is going up, it means that new shorts are opening. But if price is going up and open interest is going down, that means that the shorts are covering. You know, it's not new longs opening, but it's only shorts that are closing. And if open interest goes down and if price goes down and open interest is going, Jesus, I got a little bit lost in what I was saying. If you go to the exocharts, let me actually show you. It's going to be here as well. If you add the open interest indicator and click here on the settings, this is the explanation. I'm sorry, I got a little bit lost. You can read it here. You know, price up, open interest up is new longs. Price down, open interest down, it's long covering. Price down, open interest ups is new shorts, and price up, open interest down is short covering. It's basically showing you how many contracts are getting opened and closed on for the instrument. And people use this a lot of times instead of the cumulative volume delta. To be fair, I never really looked at it in depth, because when I was trading legacy markets, this was not something that was used basically. But what they did on the exo charts, and I think this is pretty actually cool, is they kind of separated the net longs and net shorts into this new sort of a indicator. And this is something where you can really have kind of a easier way of looking at these things. Once, as you can see, yesterday, it's weekend, so the weekend price action is not the best, but yesterday we basically moved up, and you can see how many longs got opened, to the point that the amount of longs was basically the same as kind of here before we sold off on Friday. So these kind of things are actually pretty useful. On a Thursday where there was a CPI, if you follow me on Twitter, I posted about this before the event. You can see the market made this kind of a compression move to the upside, really just buying, and look how many new longs got opened. The second market started to failing, there was this huge flush of all the longs that got opened, although it took a little bit of time for them to completely flush. But you kind of get a point of looking at these moves and watching longs and shorts kind of opening at these different legs. This is not something that I use much, like I said, this is just a kind of an easier way to looking at things, and I know I didn't cover it on in the bootcamp, and you might see me sometimes post about this, but I still prefer to use the cumulative volume delta, because it goes more in depth about that passive and active order flow, and you will see that these things will be kind of the same. So yeah, the cumulative volume delta is go-to indicator for me, but like I said, I'm sometimes posting about these net longs and net shorts, so it's worth to cover how they actually work and how open interest works as well. Another thing which is specific for crypto is the aggregated tape. Okay, so this is the template you got inside under the video of the setting up the platforms. And as I mentioned, I have trades for Bybit, I have trades for all the futures, FTX. This is the futures cumulative volume delta. Here are the liquidations. These are liquidations only, and these are spot trades. So how to use this thing? Obviously, the heavier hand in crypto is a spot. So one of the situations you might get yourself into, you won't, unfortunately, it's weekend, so we might not see many trades today, but it is kind of what it is. If you will, for example, see a constant bid from a spot market, and exchanges like FTX and Bybit are going to be constantly selling, and overall futures, this is actually a sign of the absorption. Spot is buying, which spot is the heavier hand, and the futures are selling. So this is kind of a one things you can use. The second thing would be generally, overall just selling or buying into the levels which is not kind of followed by the price. This is the simple way of the absorption, when the futures are selling and market is not responding to that. There are some nuances. Okay, the middle bar is kind of all over the place. I have exchanges here like Binance, this is Huobi, I think, or Femex. I'm not looking at these much, but for example, let's say that market will kind of flush down to any sort of levels where you are interested in buying, and only thing that you are going to see on this tape would be that no one is buying. You basically hit a level of support, so you have a kind of a level, let's say you want to play some sort of a failed swing, and market will, punch below it and start to kind of pushing higher. But you will only see Bybit is buying. All these things are still kind of a neutral or selling. This is a not good way how you want to form a bottom, since that because the Bybit is a heavily used retail exchange. They are not the ones usually that get the moves right. So if you see some nuances like this, for example, you can kind of assume that this is not going to be the best bottom, and market is most likely going to make one leg lower before any sort of reversal. The relationship between Bybit and FTX is also interesting. Obviously, FTX is owned by Alameda, which are they are a huge market making firm. When it comes to relationship between these two, it's really safe to say that FTX and those people who trade size there have kind of a bigger power to actually create bottoms and tops rather than Bybit. So market is hitting any sort of resistance where you wanna, for example, fade the market. You will see Bybit still buying, but FTX is selling in the level. This is a better signal than kind of if it would be the opposite. Once again, the extremely important thing when it comes to all of this is that you need to have a level. This is not a kind of a standalone situation where you just sit, market is in the middle of nowhere and you see something on a tape and you start, buying and selling like a crazy person. You have to have this whole trade idea from your kind of a 30-minute to execution chart to solid levels. The execution patterns have to form and everything. This, when it comes to this, for me, this is kind of a last thing I want to be looking at. Sometimes I completely ignore it. Sometimes it's worth to see if you can spot any sort of patterns. But like I said, not standalone thing for me. I know it's a standalone thing for some people, but it's extremely easy to get lost in these things. You will, during the trading days, these things will be really fast and you will just start panicking. Okay, so this is that. This difference between a spot and futures is dictating the funding in a crypto. Once again, funding is something that is extremely popular tool by a lot of people. I think it's useless for any kind of a direction type indicator. Let me show you quickly on TradingView once it is going to open. Okay, here is the TradingView platform, and if I take a look at BTC, give it a second for load. Yeah, overall, it really doesn't matter if funding is positive or negative. It's maybe for any kind of long-term trading, but I really doubt that as well. If I'm gonna go to the indicators and we're gonna check out funding, there is this one is good one, the funding premium index by Neobutan. It's for BitMEX, but and you can see basically that funding on BitMEX is running in 8-hour cycles, and it's going to be basically either positive or negative. If funding is positive, then those that have long opened are paying small fee to shorts, and if its funding is negative, then shorts are paying longs. But it's not, there is not really a kind of a standalone signal for you. If market is once again going to level where you want to buy and funding is actually negative, which means that shorts are paying longs, then okay, it can be a good kind of a confluence tool. But other than that, don't use this as standalone indicator. You will see that in downtrends funding can be negative for a couple of weeks and months, and markets still won't reverse. In uptrends, funding can be positive, and it doesn't matter. It's pretty much useless. So just quick word about the funding. The last thing about this aggregated tape, cumulative volume delta from futures markets. To be fair, I'm not really looking at that. I'm looking at the CVD on Bybit. I think it's actually better. So nothing really there. You can even hide it. I don't know why I have it here, but this is actually cool. This is a histogram of liquidations, and you can see that in any cases where the liquidations will kind of pick up to really a large extent, for example here yesterday, you can see you have a kind of a decent bounce from the level. If I'm going to scroll to, this is 10th of February, which was there are different times for this, so it's going to be a little bit complicated. I think it was here, and market didn't really bounce from there. But yeah, basically the liquidations are your mean reversion indicator. So watch any time where liquidations will pick up and try to see if you will find any kind of a reason for a mean reversion trade. When it comes to this, really look at the extremes. If you will be picking on every single kind of spike in liquidation, it's not going to go well. It's once again just a indicator for confluence rather than making any kind of standalone decisions. You can see 8th of February, the times here are different because I have different time zone for these two platforms, so ignore the exact time, but you can see here the red dots, that are also showing indicate liquidations in Bybit, and you have this huge pickup on the aggregated tape. Market basically breaks kind of into this high, and then you have this kind of a very shallow retest for a QM. This would be quite a hard trade to execute, but you lose the structure here, and market will just make a tiny bit of a pullback and flush lower, and this is where you use the liquidations as your confluence tool. Okay, so this is what I wanted to cover. When it comes to crypto, there are these small kind of nuances or tool that you won't find if you are trading something like ES or legacy markets or whatever. You don't need to use them. First of all, if you kind of ignore the aggregated tape completely, if you will ignore the funding rates, if you will ignore the open interest and net longs and net shorts, nothing is going to change. The core of the strategy is going to work the same, but just I wanted to show you these different kind of things that can be actually useful in some cases. Okay, so thanks for the attention.